Alright, so this video is on Rivian, and the question is, where will Rivian be in 3 years? I like to say a lot higher, as prices are pretty much at all-time lows if you look at things on the monthly chart. And we are talking, relatively speaking, from where prices hit all-time highs at $180 during the IPO in November of 2021. However, although you at all-time lows, price can go lower, price can chop sideways before eventually moving higher. I do think Rivian will be one of the EV companies that make it out to the other side. However, price moving higher will be met with some headwinds. Now, the first headwind is no longer valid. You did have a drop in price, two basic candles and a drop, taking out the pivot low. However, since then, price, although hasn't closed above, has pierced the upper portion of the zone. Still serving as resistance, but much less resistance now. The main target that I'm looking at of resistance is going to be at this weekly sellers level at $16, which is nested within a support, now resistance band, after price broke through and then the process formed this weekly sellers level. This is the daily chart, and I just want to look at the price action. These were wicks that we saw on the weekly chart. Again, this is the daily chart, and as you can see, you did have a reaction once price penetrated the zone 150%, right? But you can say price is oversold, and you can say other buyers see current prices at a discount, and so eventually price did push higher, hitting $12 before bouncing back. So I'm actually going to take this off the charts. Again, the next big target is going to be up here at $16, which is also where the 200-day moving average is currently sitting in right now, which would serve as dynamic resistance. All right, so where will Rivian be in 3 years? All right, so Rivian Automotive highlights the dangers of investing in IPOs. Again, stock is down roughly 86%. But after several years of decline, is Rivian finally ready to turn over a new leaf? Now, you can recall back then, industry leaders like Tesla were stunning Wall Street with exceptional growth and margins, and investors were willing to assign high valuations to smaller, pure-play EV makers like Rivian. But then reality hit. We had interest rates spike, and a lot of investors came to their senses and realized that Rivian was overvalued, and it didn't make any sense that price was selling at $180. Aside from its fresh and edgy brand, the company has no distinct economic moat separating it from its traditional automaker rivals, which are also pivoting to EVs. Now, as EV industry competition and interest rates rose the last couple of years, the market began rethinking Rivian's valuation, especially as it continued to miss its lofty production targets. Now, first quarter revenue almost doubled year over year, a 71% increase in vehicle deliveries. However, Rivian's bottom line is still moving in the wrong direction with an operating loss of $1.48 billion. If you wanted to start up a company in the car manufacturer, well, just ask Tesla. It took them years before they became profitable. Now, over the next 3 years, Rivian's management aims to scale the business into profitability, an achievement that will reduce the threat of equity dilution and make investors more comfortable returning to the stock. According to the CEO, the company can hit its first milestone, gross profitability, by the fourth quarter of this year. We'll see. Now, Rivian allows investors to bet on the growth company at a substantial discount to its previous highs. Again, prices trading around $10. The all-time highs was at $180. If the company can achieve gross profitability in 2024, it could set the stage for it to outperform over the next 3 years by scaling into positive cash flow and net income. And with that said, it's why I believe prices will be a lot higher in 3 years. Thanks for watching. Subscribe. Please like the video.